Good afternoon, everyone. I'd like to welcome you all to the Halftime Talk feature interview series. I'm delighted today to be joined by Haythem Rashed, founder and managing director of Quidux Consulting. Haytham, thanks so much for joining us today.
Thank you. It's a pleasure to be here.
Great to have you. Well, I'd really like us to focus our time with you today on Libya, all things oil and gas, Libya, because I know that that's an area that you follow. And of course, has been in the news in the last few weeks. Let's start by talking about just the news of the literally last week, which was that they announced the awarding of, I believe, 5 blocks in this new licensing round. That's the first in almost 20 years, isn't it, in the country, for obvious reasons. But just give us your sort of overall impression of, was it a success? Was it deemed a success by the industry so far? And if so, why?
Okay, no, it's a very good question, and you're absolutely right. It's Libya does seem to be the sort of topic of the day at the moment. The bid round results came in last week, and the key point here is that, as you say, 5 blocks out of a total of 22 were awarded. So on one measure, you could say, there were a lot that were unawarded, and therefore, it does signal some cautiousness from the industry still around Libya, despite actually geologically being very attractive, and there's clearly a lot of interest because of that. But on the positive side, what I would say is that if you look at the composition of those that were awarded the blocks, I think that's a nice, if you like, endorsement of the potential that Libya has. So in particular, Chevron, the first, coming back to the country after 15 years of not being active, I think is an important measure, an important signal. The others were, Repsol, Eni, and a few other partners, Qatar Energy and Turkish Petroleum, which are, for a number of those, particularly Repsol and Eni, they operate in country. To some extent, you would expect them to be involved. But for me, the fact that Chevron were awarded a block, and that they also signed an MOU in a previous event in sort of late January, I think is a signal that there is clear some interest in Libya. If I could just perhaps related to this, just talk a little bit about the broader picture in Libya right now, and because I think what has changed for me, and I've obviously been following Libya for many years. I'm Libyan myself, and we have seen tremendous volatility in production over the last decade. But I think what we've seen in the last 12 months, which is a sort of pretty stable actually and pretty strong production coming from the country, I think is a sign that there are some changes, positive changes that have been happening, and it's worth keeping an eye on those. I'll come back to that in a short while, but we're currently around 1.3 million barrels a day of crude, roughly, and that has been pretty stable all the way through the last 12 months. That's been helped by more workover activity. There's just generally more activity going on, which I think is encouraging. And then the license round was this additional kind of piece of news that everybody was watching and anticipating. Remember, this license round was launched in March last year.
Yeah, almost a year ago. That's right.
Exactly.
Yeah.
So it's almost a year old. And at some point, and this was originally meant to be, the results were originally meant to be announced in November. So this is a little bit delayed. And there were some concerns that, we might not get to a point where they'd be able to award licenses, where the results might not come out. And so actually, I think the fact that Libya has been able to launch a bid round process, run it, get to a point where they have a conclusion, and have awarded successfully some of these licenses, I think should be seen in the context that Libya has had a lot of challenges, and I think this is a very positive thing to see.
Yeah, absolutely. Well, let me just take you up on that. So, obviously, a very positive development, especially in relative terms to recent years where we haven't seen any blocks offered or even taken up and awarded. Can you speak a bit to, let's not dwell on why we're only 5 blocks awarded at this stage. Well, let me ask you quickly. Do you expect others to be, is there a timetable or expectation that there'll be further uptake for the remainder of the 22 blocks? Or was there a reason these 5 were selected and not the others? Let's say, why didn't Chevron go for more than one, for example? Let's just ask you about that if you have an answer. Yeah.
Yeah, I obviously am not privy to the details of the negotiations and the details of the decision-making process. But when you look at the split, there's a roughly equal split between offshore and onshore blocks. So it's a bit of a mix. The Chevron block was an onshore block, but there were offshore blocks also awarded to Eni and Repsol, for example. I think based on what I could see and when I sort of listened to the NOC when they launched the bid round, they were very keen on exploration, right? Because there are a lot of these blocks have some wells that have been drilled, they have some data, but it's really about exploration and actually
Okay.
tapping into it. What I would actually say is probably for the IOCs and for international operators today, there is some appetite for exploration, but really the what I think the prize in Libya is about development drilling, and it's about greenfield and brownfield opportunities. This is what I think the focus is more on these days with Libya. And the reason is because the geology is there. It's lower risk, of course, than exploration, but also I think there are relatively low-hanging fruit. We can come on to this when we talk
Mm,
about Libya's ambitions for production in the long term. But
yes.
that's where I think the real prize in Libya is it's the low-hanging fruit, and it's about actually using existing wells, existing fields, and actually just doing more with them. So that's why I think perhaps the interest has been more about where there are opportunities to do more development rather than just pure exploration. That would be my take on
Okay,
why not.
interesting. And I mean, can you speak to the actual sort of, I know again, you are privy to the negotiations, but I believe that sort of the terms offered also, the new sort of production sharing agreements have been improved, obviously were made attractive enough to get this investment in. What was the basic difference or sort of, I suppose, modern take on those agreements that perhaps was also attractive for IOCs?
Yeah, no, Diala, that's a very good question because just for context, remember that the EPSA 4, which is the last kind of contracts or production sharing agreements that were in place in Libya, were put in place in the early 2000s. We're talking 20 plus years ago at a time when the oil market looked very different to where we
Yeah.
are today. And Libya at the time was able to was able to secure some of the most attractive terms for Libya that probably were out there. So we're talking about 90% government take, which is very high
Mm,
compared to
mm.
other production sharing agreements in fiscal terms across the world. My understanding is that the current terms, that the new terms that will supersede EPSA 4 are better, more like, I haven't seen sort of specific numbers, but more like 60 to 70% government take compared to perhaps 80 to 90. So it's definitely a step in the right direction. But what they've also done, this is getting perhaps a little bit technical, but they've made some tweaks to what previously had been in place, which is things like removing a B factor, which meant that if production ramped up previously, you would get penalized as the operator,
Mm.
and that now isn't the case. And then the R factor, which is sort of how much you get in terms of share of oil, that's also on a sliding scale, in terms so that there's not a fiscal cliff sometimes when these fields start producing. So I think there clearly, what I think has happened is the NOC has been listening to the industry, has been listening to what needs to change to make this more attractive. And I think that there was even some discussions during the bid round process to kind of further fine tune the terms. But the final terms I don't think have been sort of published or are public yet. But certainly, they need to be better than what they were before, I think, to attract the interest. There
Okay. I mean, you mentioned that currently it's 1.3 million barrels a day, and there's a target now, of Libya to sort of ramp up that production up to 2 million barrels a day. Obviously, it helps that these new, obviously this exploration, I said, and development drilling, as you said, is going to help them reach that. How realistic do you think that target is? How soon does the industry think it could be reached if all goes well? Because that's a significant amount, isn't it? Adding 25% extra. What is the sort of a timeline for that realistically?
Yes. I think there are two ways to look at this. There's almost what is possible, and then what constraints and challenges and
Mm,
considerations do you have to put in place. And in terms of what is possible, I think this is not controversial to say that the 2 million barrels a day is more than achievable. That's actually the interesting thing about Libya. Libya has never been about the geological risk that you have in the country. And why do I say that? Because as you said, 1.3 today, 2 million by 2028 is sort of the target that the NOC has been talking about. And let me give you a couple of numbers that kind of really put this into context. So Libya today has about 4,000 completed wells. Okay, that's the whole well inventory of the country. and about 25% of those are shut in.
Mm.
So around about 1,000
Wow.
wells.
Mm.
Now, 1,000 wells, you could argue, best estimates I've seen is that about 40% of those, less than half, have got major issues. So you'd need to spend a lot of money, a lot of effort to get them to start producing again. So you could perhaps discount those and say, let's put those to one side. They're not worthwhile doing. They're not commercial. The remaining 600, they are wells that have been shut in for various reasons, but actually could be quite easily solved. And what I mean by that is it's things like managing the water cut better, better artificial lift. It's stuff that is very normal and very standard technology all around the world. It's not particularly rocket science in terms of the technology needed to improve those. If
Mm.
you were actually to unlock those 600 shut-in wells, for example, you could quite easily add 300,000 barrels a day. You could go from 1.3 to 1.6 and maybe even beyond quite quickly. Why does that matter? Because what it tells you is that getting to 2 million barrels a day is not about Libya finding lots of new oil or
Yeah.
greenfield development projects coming in. It's actually about just using the existing fields and wells and optimizing those in a better way. And you can very quickly get to that. Another data point that's worth keeping in mind, Repsol is the operator of the El Sharara field, which is in the south, in the Murzuq Basin of Libya. And it's one of the bigger fields in Libya. It is currently producing around 300,000 barrels a day. So you could say it's, kind of a substantial part of
Mm.
Libya's overall production. That field had issues with shut-in production because of, either there were protests or various other events that happened over the last, years. And that was fluctuating sort of around, 200, 250, and up to 300, as I said now. Repsol are now, in recent weeks, I think it was at this event in Tripoli in January, they said that, they have aims or ambitions to grow that from 300 to 350 by the end of 2026. And they've already, stabilized it at a higher level at 300, in the last 12 months. So what I'm saying is that even in one field, you can see that by just doing things, just by having that stability, having a little bit more of this development work being done, workover and maintenance activity being improved, actually you can see some fairly significant gains. So to answer your question, 2 million barrels a day, very achievable. Now, here's where the challenges lie, and this is where
Political is, I assume, the crux point of the risk, if you like.
Yes and no. I mean, yes, there, of course, that is an important factor, but it's not the only factor. And I think the main,
Mm.
and maybe it's related to that, but the main factor I think really is one, the funding, and two, the infrastructure investments that are needed as well.
Okay.
And what I
Mm.
mean by funding is that the NOC is funding constrained at the moment, so they don't have the capital to just go out and deliver 2 million barrels a day of production by 2028. So they are very actively looking for support from the international community, IOCs, and others to basically fund this growth. And at the same time,
And I mean, IOCs are one thing, but presumably outfits like the IFC or other sort of, I suppose, private, international banks, would they be sort of approached as well in terms of taking some equity in this?
Possibly, I think they are exploring all avenues. So I know that the NOC, even I think the oil minister did talk about at this event in January that they are looking to secure sort of funding elsewhere, loans potentially as well. But I think the majority still will come from effectively service companies and IOCs
Mm.
coming in and doing work in Libya. Now, this is where the challenges lie because, I know that some operators have cited, payment, getting paid in a timely way is one of one of the issues that they
Of
face, and
course.
getting those payments sort of or areas reduced. So I think that's where what you find is the challenge in Libya is that companies really want to come in and do work. They're a little bit cautious about the ability to get paid and various other things, and whether the environment is kind of conducive to them being able to operate in a stable manner. So what you find is that companies are typically looking for shorter dated paybacks wherever possible. They don't want very long-term projects. And actually, I thought what was very interesting when you look at who has been awarded in this latest bid round is that even when there are partners or consortium, sorry, you have one partner who is an existing operator in Libya. And to me, I think
Yeah.
that's an important signal. What it shows you is it's people who have existing cash flow coming out of Libya. They're willing to perhaps do more in Libya, but it's those who don't have perhaps current operations in Libya, they're a little bit more cautious because they don't have a cash flow today. So they would be deploying capital, but without any return in the near term. That's why I say the Chevron if you like, vote of confidence is actually quite an important one, because the fact that they want to come in and they don't have any cash flow coming out of Libya today is probably a vote of their intent.
Yeah, a vote of confidence. I mean, it's a vote. I mean, as you said, the fiscal framework of the government, it's weak. Obviously, it needs loans, it needs investment, but the way that these countries like Libya get investment and get loans is trust in the political system, or as much as can be had at least. So where would you today place that stability, if you like, for medium to long-term investment? Obviously, Libya has had a very volatile political history in the last 10, 20 years. Do you, as a Libyan, also feel that this is a new beginning, that we are really, seeing a slightly more stable future on the political front?
It's absolutely probably one of the most important questions for Libya right now. I would agree with you, Diala. So and I must caveat, I'm not a political analyst. I'm not a sort of political expert, but my reading of the situation, having been very close to what's going on in the country at the moment, is that there does definitely feel like a change in the wind, in terms of there is a willingness to try and get to a more stable place. I wouldn't say complete kind of resolution of all the issues, but let me give you one interesting indicator. So there was an event, and this is the one I referred to earlier, in January, called the Libya Energy and Economic Summit. It's become a bit of a key event in the Libyan calendar in terms of what's going on. It's become a bit of a bellwether. And you had Saad Boulos, who is if I understand his title correctly, is the special advisor to the Middle East for Trump, and for the Trump administration, attend this event. So very high level sort of US political kind of
Yeah.
announcement, plus very senior members of the energy community, the CEO of Conoco, CEO of Total, etc. But at this event, Mr. Boulos was very clear about the US sort of interest in resolving the situation in Libya and trying to help Libya get to a better place. Now, to me, that was probably one of the most public endorsements I've seen to try and resolve the situation. You hear about various things, and this is again sort of perhaps a little bit kind of more of an opaque area, but discussions going on in various different capitals at the moment to try and resolve things, to try and bring the various competing factions, whether it's the Dbeiba government in the West, or it's the Haftar supported institutions in the East, and try to bring them together to get to some sort of outcome. Now, actually, the reality is, Dial, and this is something that perhaps some people don't always appreciate about Libya today, see it as completely fragmented and they don't talk to each other. That's actually not the case. So today,
Okay.
we have a lot of if you like, discussion or informal partnerships between the various groups. And this is where I feel a bit more optimistic in the practical terms about what's going on in Libya. There has been a recognition, I think, in the last 5 years that oil production and Libya's, the stability of Libya's oil production is really important for everybody, not just the East or the West or the South or whoever. And so
They all benefit. Yeah.
it's almost an unwritten rule that this needs to be protected to some extent, and there does need to be some stability there, because that's how we fund, the spending and everything else that comes out of it. So I think that, plus the fact that the US seems to be signaling more willingness to help resolve the situation in Libya, to me, perhaps provides some positive.
Yeah. Well, it provides some evidence that the US has an interest in Libyan oil and gas as well, of course. It might be helping Libya in the process. I thought we'd get through this interview without mentioning Trump, but one cannot get through any conversation without mentioning his name. But no, very relevant point. You mentioned oil, Haytham, and we were talking about it. What about gas? In terms of sort of its neighbor, Europe, obviously Europe at the moment securing its gas from LNG from the US, still a bit of gas from Russia. Elsewhere, you've got Algeria and Europe talking as well. But how meaningful do you think that could become, compared to the current sort of status quo and investment on that front?
Yeah, that's another very good question and an important topic. So just so it's worth keeping in mind, aside from the million barrel a day oil target, Libya also has a gas target of 4 BCF, 4 billion cubic feet
Yeah.
day production. Currently, production's around 1.5, so it's a significant step up
Wow.
from where they are today. Now, the reality is that there's a sort of simple kind of equation, which is that if you increase your oil production, by definition, gas, because there's associated gas with the oil
That's
production, that
right.
will increase. So that's not too much of a stretch in that sense. However, gas has still been a bit of a challenge, I would say, in Libya. So, as of today, currently producing, as I say, around about 1.5 BCF per day. And the main way that you would get gas into Europe is through existing infrastructure, the Green Stream pipeline, which comes out of Melita in the west of Libya, and that pipes gas directly into Italy. And there are no, I haven't seen sort of the latest numbers, but it is operating well below nameplate capacity. That pipeline has about 11 billion cubic meters of annual capacity. And my understanding is somewhere between 10 and 30% is what it's operating at. So there's a lot of
Wow.
capacity to actually grow gas production. So capacity or pipeline capacity is not the issue. It's not the constraint. The challenge in Libya is developing gas reserves, or improving the gas production, reducing flaring, and focusing on using that gas for exports, for example, or domestic consumption, and having the infrastructure to do that. And I think that's where the challenge is. I come back to what I said earlier, which is that Libya has infrastructure investment needs, and gas in particular. And I think that's where, unless you start to see major change around investment in the midstream and infrastructure, I'm not sure that you're going to see a significant ramp up in Libyan gas exports anytime soon. Also, partly because, Diala, any increase in gas production initially, I think, will be used for domestic consumption.
I
So
wanted to ask you, what is the domestic demand, and how is, I mean, is it at the moment lacking even in terms of supplying its own domestic demand, and once things are up and running even more, will there be anything left to export essentially?
yeah, so I think today, it's largely meeting, domestic gas needs, but
Mm.
there are plans also to increase power capacity in the country, and that will obviously need more gas consumption. One of the positive things in Libya in the last at least 5 or 6 years now has been that actually power outages have been much less common than they used to be. We used to have an issue with power and availability of actually power in the major cities. So that's no longer, or much less of an issue than it used to be. But I would say gas is probably less of a, and it's also, the other thing to keep in mind is that gas is still less of a priority for international operators and other stakeholders versus the oil. So that's why I think it is a bit of a longer dated story in my view compared to other options. But notwithstanding the fact that Libya has a large amount of capacity that's underutilized, that could be used potentially with the right investments put in place.
Haytham Rashed from Quidux Consulting, thanks so much for joining us today on Halftime Talk. It's been great to have your views and insights on the Libyan oil and gas sector, which is, I have to say, a rare thing to access. So thanks so much for joining us.
No problem. I wanted to, Diallo, just before we closed, I would say
Yeah.
just things that I wanted to leave people with in terms of to watch in the
Yes.
next 6 months or so. The first is that the first deep water exploration well was spudded in Libya back in January. Matsola 1, that was ENI and BP are the partners. Really interesting. Keep an eye on that, because
Okay.
if it's successful, that unlocks a whole new story about deep water offshore, which Libya didn't have or hasn't had for many, many years. So keep that in mind. The second is that these license awards, you need to see the execution of a production sharing contract come afterwards. So keep an
Right.
eye on that, because if that does happen, then I think that's a really good step. And it shows that this is actually going to progress rather than it just being sort of an announcement, and that's it. And then the third thing is that I mentioned earlier, if you've got international operators like Chevron who don't have cash flows in the country today, but start to deploy capital. So if you start to see them ramping up activity, I think that's a very strong sign that people are more confident about the environment and what's going to happen in Libya. So those are my three things to watch over the next 6 to 12 months.
Haytham, thank you so much for joining us. That's fantastic, and we will be keeping a close eye, and hopefully perhaps get you on in 6 months' time for an update and see where we are.
Pleasure.
All
Thank
the
you.
best. Thank you so much.